What's up guys, Ben here and welcome to Motivation to Invest. Breaking news, Airbnb, the popular rental online marketplace, founded in 2008 and known for disrupting the hotel industry, is going public this year in 2020. This is massive news guys, and I predict this IPO could be the biggest of the year. Airbnb is a fantastic company and the original disruptor, as the hosts on Airbnb's platform can earn money by renting out their homes, and the guests can save money by renting a house, an apartment, or even a tree house for less than the cost of a hotel room. So in this video, I'm going to deep dive into the headlines, the numbers, and the reasons why Airbnb is going public, because this may not be what you initially think. Before we get started guys, if you appreciate breaking news updates like this, then feel free to give the video a big thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here, hit that subscribe button, turn that notification bell on if you want more investing tips and exclusive stock market picks, which I'm personally investing into. With that being said, let's dive in to these headlines. So breaking news here, Airbnb files to go public, the latest hot name in an unlikely booming market for IPOs. We've seen Palantir IPO, we've seen Snowflake IPO, and many EV IPOs along the way. But to me, Airbnb will be the most gigantic we've seen this year. I predicted this IPO a few weeks back when discussing Bill Ackman. Now, companies go public for a variety of reasons. The first reason could be to expand their business. Let's say they have a profitable business model in order to grow that business fast and gain market share. The second reason businesses go public is to survive. And unfortunately, in this case, that is the reason Airbnb seems to be going public. So in January 2020, guests made a net 33.3 million bookings on Airbnb for rooms and experiences such as city tours, cookery classes, and even stand-up comedy workshops. However, by March, they made a net 4.1 million cancellations like the rest of the travel industry. So Airbnb was truly in crisis. But one advantage I do see with Airbnb being a technology company, being an online marketplace, is that they don't have the number of fixed assets which hotels have. So hotels still have their fixed assets. They have to pay business rates. They have to pay council tax in order to sustain these large buildings. Whereas Airbnb, they pass all those costs onto the host. So all companies before going public must submit what's called an S1 filing. So this is basically their numbers and details about the business. So in the S1 filing with the US Securities and Exchanges Commission, the home rental startup disclosed a revenue fell 18% year over year last quarter. So the company managed to turn a profit of $219.3 million. So they still managed to turn a profit despite the issues. The Airbnb also logged 2019 revenue of $4.8 billion compared to $3.7 billion in 2018. So before this crisis, the company was growing, and we can see its revenue grew by over $1 billion between 2018 and 2019. So this was a 32% year over year growth. Now, generally, I say a growth stock is one which is growing at least 15 to 20% per year. This is growing at 32% year over year, apart from this year in 2020 when we've had the lockdowns and the global health crisis. So the question for potential investors really should be, if you believe the travel industry will recover, then Airbnb could be a great investment. Personally, I do believe the travel industry will recover, and I used to rent my own apartment, the one I'm filming this video in right now, on Airbnb, and surprisingly the other day I actually received a booking for a few months down the line, and unfortunately I had to say to the person, well, I'm not really renting it at the moment, it was just on the system. But still, it shows that the travel demand is there. People are dying to travel, they're dying to get out there and see the world. And Airbnb is a great enabling technology for people to do that. Now, I will assess the bear case on Airbnb, and that is people's consumer habits may have changed. People may not wish to stay in other people's homes, especially with this global health crisis going on. The other person's hygiene and cleanliness habits, and that may put them off staying in someone else's home. So prior to the global health crisis, Airbnb was actually expanding out into experiences, flights, and even as a potential media brand. So here we are, we're in the consolidated financial statement. So let's check out the company's balance sheet and see how healthy or unhealthy Airbnb is looking. So we can see 2018, they had $2.1 billion in cash and cash equivalents. 2019, around $2 billion in cash. And still, as of September 30th, they have $2.6 billion in cash. So they still have a large cash position, $4.384 billion in total current liabilities. So that is a worrying sign, actually. So forget what I just said about having plenty of cash. They have got plenty of cash, but they've actually got less cash than their short-term current liabilities. Now that is a worrying sign. So current liabilities are those debts due within, say, 12 months. So my investing thesis was right on this company that Airbnb is going public to survive. Now that is a worrying sign, and you should definitely be aware of that when investing into the business. If they used all their cash, which they have today, $2.664 billion, to pay off this current liabilities, they would still be around $2 billion short below that as debt. It's clear that they plan to raise more than that during the public markets in order to cover themselves and actually make their balance sheet a lot healthier. Let's look at the long-term debt. So the long-term, they have $1.8 billion in long-term debt as well, which also needs to be taken into account. Now, the great news about this whole global issue in this recession that we're in, governments have been very friendly to large businesses and even individuals alike. They've offered stimulus packages, they've offered furlough, employee payroll support schemes, they've offered government grants to support businesses. So I do imagine that Airbnb will have great financial terms with its lenders and thus may be more flexible to this issue due to the government support. However, this is still worrying to see on the balance sheet, and we'll see how that improves during the IPO. Okay, so now we're on the income statement. So we can see here there's around $2.5 billion in revenue 2017. That shot up all the way to $3.68 billion by 2019. 2020 year so far, $2.5 billion. So it's similar levels in terms of revenue that it was back in 2017. Now, that is pretty good considering a lot of the operations have been stopped. A lot of countries are on lockdown, including here in the UK, Germany, Italy, France, many other countries are on lockdown. The US is talking about potential state-by-state lockdowns. Nobody's really encouraging travel, yet it still managed to bring in $2.58 billion somehow. However, that shows that we do have, the company has a net loss at the moment. So they have an income loss from expenses of $489 million. So this company is unprofitable and has been unprofitable the previous years. Now, the previous years, we could put that down to the company was reinvesting for expansion. Perhaps they were spending more on product development, as we can see here. They might have been spending more on marketing. They've been expanding into new areas, experiences, etc. But this year, $489 million loss, that is a substantial amount. So that is another worry for the company, another red flag, number 2, which we do need to be aware of. So this is another red flag for Airbnb. I started off this video very optimistic on the stock, and I still am as a brand. But what I don't like is I've seen stock-based compensation of $108 million in stock-based compensation, yet the company's supposed to be struggling with financial uncertainty. 2019, they only had $72 million in stock-based compensation. So that's increased. Now, to me, that doesn't seem right for a business. They should be cutting that cost during these times. Executives should be taking less stock-based compensation during these times. Instead, this is the highest we've ever seen. I don't like that from a corporate governance perspective. Right, guys, so overall, Airbnb is a very interesting company, and I do believe this will be one of the biggest IPOs we've seen this year. I believe the brand is great, the business model is great, and the business's growth rate is fantastic. However, due to this global issue, the company's balance sheet has took a major hammering. They're around $2 billion short on their current liabilities and their current debts. They don't have enough cash to cover their long-term debts. The company is unprofitable, and also don't like that the company has increased their stock-based compensation during these uncertain times. But there is a silver lining to this. So the whole idea of going public is to raise money from the capital markets. Does go public, it will raise billions and billions of dollars. Hopefully that will improve their balance sheet and help to mitigate these losses. However, the risk is if this global health crisis continues on a lot longer, then we could see a lot of share dilution as Airbnb issues more shares to keep the company going. Now that's a risk for the company. Personally, I will be watching this stock very closely, and I do still think it will be a fantastic company in the long term. So that's my thoughts on Airbnb. What do you guys think of Airbnb? What do you think about the business and the business model? And also, what do you think about the numbers and the issues I've highlighted? Let me know your thoughts in the comments below and I'll join in the discussion. And if you guys found this video valuable, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here and you still haven't subscribed, hit that subscribe button and turn that notification bell on for more investing tips and exclusive stock market picks, which I'm personally investing into. With that being said, I hope you guys have a fantastic day and I'll see you in my next video. Invest safe.